This is Thinking Solo. I'm Ryan DeRusso, a fee-only financial planner, and today we're going to talk about a tricky topic, buying a house when you work for yourself. As a private practice owner, you may have experienced this before, or you may have shifted to private practice since the last time you got a mortgage, and now you're looking to upgrade your home. Or you might be on the search for your first home. Well, let me tell you that buying a home when you are self-employed is unlike any type of loan process you have ever been through. When my wife and I first bought our current home, the loan originator didn't even want to use my income in the calculation because of the complexity of my profession at the time. Don't let this happen to you. Instead, take these important steps and consider these particular moves to improve your home buying process and give you the best chance at a reasonable rate. When you begin seeking out a house, first you should understand what the bank wants to see when they're approving a loan. They want to know that the loan will be paid back on time and that there's little risk to their investment. You know what's a bit riskier than your average person in the bank's eyes? Those self-employed or in private practice. Why is that? Income fluctuates. It's difficult to tell if you're someone that's self-employed successfully or not. And the bank doesn't always have clarity in how long you'll keep your current clients. This all leads to the belief that you might be somehow a riskier bet than the average customer. So what does this mean? The bank may offer you a higher rate than you normally would receive, or you might need to put more money down, or they might not approve the loan altogether. It's the reality of working for yourself. But now that you know that, try to strengthen the areas that they're most concerned with. First, make sure you see some certainty in income. The bank will ask for all sorts of information from your tax forms and whatnot. Have at least 2 years worth of income consistency to improve your chances. The more organized you are in your business with the ability to show expenses and cash flow, the better off you will be. Next, minimize debt and expenses. There are two very important numbers that you will need to know before you begin searching for your house. These ratios are what the bank uses to understand whether you can afford to take on more debt, like what's required with the house. The first number is your front-end ratio, or housing ratio. This would take your projected mortgage payments, insurance, and taxes compared to what you make in a month. They don't want this number to be above 28%. The second ratio is your back-end ratio, or your debt-to-income ratio. This takes all your debt payments in a month, including the mortgage, credit card, vehicle, student loans, and any other payments compared to your monthly income. This number should be below 36%. The lower these numbers, the better off you will be whether you're self-employed or not. But for you, in private practice, having these ratios buttoned up will provide you with protection from other perceived shortcomings from a bank perspective. Take the opportunity to create a plan to pay off outstanding debt before you begin your search. Some debt, like a low car payment, isn't too much of a concern. But if you have credit card debt or another expensive personal or business loan, make sure to address that. By demonstrating responsible debt management and disciplined financial habits, you'll enhance your financial profile in the eyes of lenders. Another thing you can do to strengthen yourself in the eyes of the bank is have a business. Often when therapists build a private practice, they hang up their shingle, but don't go through the steps of getting a PLC or a business entity in place. This can have some downsides from a tax and liability perspective, but it can also impact the ability for the bank to see you as more than just a fly-by-night shop. When you develop the corporate entity, whether it's a PLC, LLC, or S-Corp, you can now have an employer that you can mark down in the many boxes you will fill out while trying to earn a mortgage. Instead of saying self in the box, you can say your business entity's name, even if it's just your name. This can help you look more professional in the eyes of the bank. While it's a simple thing, one that will not replace an overall financial analysis, it helps to place you in a spot of power. If you go further and do have an S-Corp, you can also write yourself down as the employee of the business. This again further highlights you as the individual that has built a secure business. And when they do the financial analysis, it can go further to ensure you're not dinged by being self-employed. Saving more for the house will give you a few advantages. You will get a better rate from the bank. You will not have to pay back as much during the life of the loan, plus your mortgage will be smaller. And if you're able to save 20%, then you don't have to worry about private mortgage insurance, which your bank will demand if you owe more than 80% of the home. This can reduce the bank's concern over the loan since you're showing the ability to cover a large amount of cash up front. But take this with a grain of salt. There are times when having less than 20% is still very viable in obtaining a loan, and in certain circumstances for your life, it's better to get inside the house. Yet when considering 20% or a little bit more versus not, All things considered, err on the side of 20% or a little more. There are many times when buying a home, you do not need to work with a broker. You can get pre-approved through something like Rocket Mortgage and then shop a few rates at a few different banks once you have an offer accepted. They won't vary much from bank to bank when you have, just regular salary income. But when you work for yourself, having a broker that has experience with working with the financial numbers of your business can give you an important person in your corner. They can look at your uncertain income and build a case for the bank to find you the lowest rate. They have experience with it. Make sure, though, that you work with a broker that has experience with the self-employed. With those important steps taken, you can then begin the shopping process. Remember, as you do, houses are not soulmates. Dream houses are sold every single day. If you find something and it's going to put you in financial stress, take some time. Reevaluate your house shopping goals and then adjust if you need to. If you realize you want more house than you initially thought, then return to your debt figures and down payment to adjust accordingly. When your finances are matching the house goal, the dream home will reappear. This has been Thinking Solo. Thanks for watching. Make sure to squish that like button, subscribe, and I'll see you next time.